All right, let's get right into it. Bitcoin's price is coiling up, and it's wound tight around a single price range that's holding a massive amount of money in potential liquidations. An imbalance like this, it means a big, decisive move is coming. And here's the number, $56.42 million. That's how much leveraged capital is clustered in one very specific spot. When you see a pile of money that big, it acts like a powerful gravitational pull on the price. So what you're looking at is a liquidation heat map. You see those bright yellow zones? That's where all the leverage is concentrated. If the price moves against those traders, boom, their positions get closed automatically. That can trigger a cascade effect, feeling a really sharp, fast move. This whole situation creates this incredible tension in the market. But what's really fascinating and what most people are missing is that the data is showing this unusual kind of counterintuitive strength in the lower price ranges. And that changes everything. Okay, so let's break down that first major zone. The data is screaming that $94,000 is the most significant target to the upside right now. Just look at this. See that dense yellow band right there, just under 94,000? That represents a huge wall of short positions. In this kind of market, a target that obvious acts like a magnet, literally pulling the price up to go and capture all that liquidity. If you're finding this breakdown valuable, drop a like and share it. And this is a perfect example of what we call a liquidity hunt. The market is almost like an algorithm, and it's designed to seek out these dense zones to trigger a cascade. Wiping out all those positions gives it the fuel it needs to push even higher. You know, there's an old trading saying that really holds true here. A move to 94K would inflict the absolute maximum financial pain on the largest group of traders, the shorts. And based on pure market mechanics, that makes it a highly probable target. But, and this is a big but, the path to 94K is not a straight line. The data below the current price is showing us a powerful contradiction to that simple bullish story. Make sure you subscribe to the channel so you don't miss these key updates. Check this out. On the left, we've got the heat map from midnight. On the right, that's 8 hours later. Now, even though the price dipped down and tested these lower levels, notice how those big yellow liquidity pools below 90,000 are still there. They haven't been cleared out, which is really unusual. So you have to ask yourself why. Why are they holding so strong? This is not typical behavior. It suggests that there's either some major active buying pressure stepping in to defend these levels, or there's a structural support that the market is respecting. The key takeaway is the leveraged longs are just not getting wiped out. And this is where it gets really interesting. That stubborn defense of the lows, combined with that growing pile of shorts sitting up above, well, it's creating the perfect recipe for a massive short squeeze. The pressure is just building and building. Every single moment that the price fails to break down, the chances of a sudden aggressive move up just keep increasing. You can follow us on Twitter for more real-time updates as this develops. And you can see it happening right on the latest chart. The price is just slowly grinding its way up, and with every little tick, it's trapping more and more short positions. It's like tightening a spring, just adding more and more potential energy to that huge liquidation cluster waiting up at $94,000. So let's put it all together. This isn't just random noise. This is a strategic battlefield, and the data has drawn some very clear lines in the sand for us. So it all boils down to these three key levels that you need to be watching. First, you've got the big prize, the upper liquidity target around $94,000. That's the destination for the short squeeze. Second, you have the current battleground, that key support right at 91,000. And finally, if that support fails, look out below. The lower liquidity target is near 89,000, and that's where the longs could get squeezed. The data really suggests the path of most pain is upwards, but that defense of the lows is surprisingly strong. So that leaves us with the critical multi-million-dollar question. Which pool of liquidity gets hunted first? The shorts trapped up top or the longs holding strong down below? Let us know what you think. Subscribe and drop a like below. Follow us on X for more updates, and we'll see you in the next one.